All right, ladies and gentlemen, welcome to MacroAce with your host, Tony. There's been some very interesting news just now. You had the ECB told ministers on Tuesday that some EU banks could be vulnerable. So again, you had news just coming out there about EU banks saying that some banks could be vulnerable. And off the back of that, the euro has seen a decline off the back of that headline there. Again, and also if we're looking at the stock market, S&P continues to move further down. The DXY moving higher as well. I'll just kind of pull up a little chart here for you so you can kind of see what I'm seeing. Here we go. Okay, there we go. There's a euro dollar. If we kind of look at other areas too, let's do euro GBP. Again, so the fallout from the Credit Suisse bank and also SVB affecting the banking system has creeped in to the ECB. So could they go with a 25 today? Well, that might change altogether. So let's get into the prep. Anyway, first of all, welcome to MacroAce with your host, Tony. Hopefully you're having a good session so far. Hello, everyone. Mickey Lyon, people calling for 50 or 20, maybe some for 25. Marcos Dominguez, 25. Ukamaka saying if that's true, even US market should rally. What do you think? Good morning, FinancialJuice team. Marcos Dominguez saying she got scared. Well, pretty much. Maybe this is the pre-setup for a 25 base point hike. Anyway, we've got about 30 minutes left to the rate decision. Again, the expected is for a 50 base point hike on the main refinancing rate or the interest rate decision, and then a 50 on the deposit rate as well, or basically across the ECB rates. But that comes into question now with that breaking headline that we had that appeared on our side. So first of all, let's go through what the deposit rate is. That's one of the rates. That is the rate that a lot of the ECB members cite when talking about where the terminal rate might end up. But the deposit rate is the first rate. The first is the interest rate paid by ECB banks to banks having deposit. I'll rephrase it again. So it's interest rate paid by ECB to banks having a deposit. So excess reserves that these commercial banks have, and they park it at the central bank. The central bank says, hey, here you go. Here's some cash in for parking your money with us. So that's what the deposit rate is. And usually it's where there's usually about 100 basis points or about percent difference between the main refinancing rate or the interest rate. So that establishes the floor on the interest rate, since no banks, of course, will lend out less than what it can earn at the deposit rate. Again, quite key. Again, will we get a reaction? I don't know, unless there is a 25. And we'll see how the markets kind of take it. De Guindos also did say some headlines too. He said confidence drop may cause EU contagion. Not really helping the gravy train there. So where is the economy at the moment in the Eurozone? Inflation at 8.5% compared to the prior of 8.6%. That's quite key, of course. Still, 4 times or more than 4 times the ECB's target of getting to 2% inflation. But still, if that's slowly coming down, then maybe the central bank might have to stick with doing 50 basis point hikes until they feel that they're confident that they're seeing substantial declines in inflation like we've seen in Canada and also in the US. Remember, we had the CPI print with the US this week, where you had seen a 0.4% deviation, a drop from the prior to the actual figure, from 6.4% to 6%. So the US is in a much better position than the ECB is, and doesn't have that much risk compared to the ECB. At the moment, of course, you have the contagion of the SVB banking, the SVB bank collapse, spreading over to Europe, to Credit Suisse. That's been the big news of the week, of the day, actually, should I say, so far, the last couple of days. So the S&P manufacturing PMI in the Eurozone, slightly worse than the prior, at 48.5 compared to 48.8. S&P services was at 52.7 compared to the prior 50.8. Consumer confidence was slightly better at minus 19 compared to minus 20.9. Don't forget, if you've seen my streams before or our streams before, don't forget to share the video, like it, subscribe to the channel, get the word out there. If this is your first time seeing the stream, I am a little bit excited because of the breaking headline that just came out. So I'm kind of interested to see what the ECB decision is today. Economic sentiment at 99.7 versus the prior of 99.9. German IFO business climate at 91.1 compared to the prior of 90.2, and a key gauge of how German businesses are feeling. And the Eurozone more or less bases their economy off how well Germany is doing overall with inflation, business sentiment, industrial production, and those sort of things, those sort of economic indicators as well. And then they kind of see how the rest of the Eurozone would be impacted by those policies and whether or not it would work to maybe change the direction or stick to the current direction that they have. German ZU economic sentiment was at 28.1 compared to the prior of 16.9. Inflation in Germany remained unchanged at 8.7, so sticky there. HICP year on year was at 9.3% compared to 9.2. So all in all, we've got to understand that the reason why we're looking at these different economic indicators here is so we can understand what the ECB might do with their policy decision. Now that we have the added risk of the contagion from the banking crisis, that makes their job a whole lot harder. They have sticky inflation, but also the fallout from the banking crisis that we're currently seeing at the moment. The market's taking a hit. You're seeing a risk-off reaction within the markets where people or traders are having a flight to safety instead. And that's causing a lot of volatility. So that's what we've got to be careful of today. But you can see the picture presented here. It's going to be interesting to see if they do go for a 25 rather than a 50. And the headline that we had just seen as well, the ECB told ministers on Tuesday that some EU banks could be vulnerable. Right, so the previous ECB meeting on February 2nd. So the ECB said that they will continue raising rates gradually and significantly in order to ensure that inflation returns to its medium-term target of 2% in a timely manner. And in any event, the ECB future policy rate decisions will continue to be data-dependent and follow a meeting-by-meeting approach. And they also mentioned that they intend to raise by another 50 basis points at the March meeting. So somebody was mentioning in the comments, actually, so A. Ben saying 50, otherwise they will lose credibility. Credibility, see, if there wasn't a contagion from the banking, from SVB and now going into Europe, if there wasn't that issue that cropped up before the rate decision had occurred, or the choice is going to occur, then there might be a different scenario altogether where the ECB could continue going with a 50 basis point hike. But as Abens is correct in saying, if they don't go with a 50, they lose credibility. But then if they don't do a smaller rate hike, then it means that they're being much tougher than they actually need to be if they're not recognizing the scenario that's being presented in front of them, and they're not being as reactionary as they have talked about in the past. ECB meeting minutes then on March 2nd, it was noted that short-term momentum in core inflation had also started to decline somewhat. Again, key point, if you have the headline inflation figure seeing some declines, but core inflation, excluding food and energy, is still accelerating much higher than what economists are expecting. That makes the central bank's job a whole lot harder. Concerns of over-tightening was seen as premature. Again, if the central bank has been on its fastest path, actually, of a rate hiking cycle within the ECB. So to take a step back and go with a 25 instead, or maybe a rate pause, you never know what could happen. Okay, there are endless possibilities, but the idea of them having to pull back from going with this very strong rate hiking cycle, again, you either lose credibility, but you're protecting the economy and you're not being that harsh, or you stick with your guns and you try and bring down inflation as best you can. So again, concerns of over-tightening were seen as premature. This is, of course, before the whole banking crisis kicked off from the US. Then ECB member views. So Lagarde said that the case for a 50 basis point rate hike this month is still on the table as inflation is still too high. Storneras said on March 14th that I don't see any impact from the collapse of Silicon Valley Bank on Eurozone banks, and that was in a Greece newspaper. Now, Storneras is usually usually more of a dovish member of the central bank. But again, if he is one of the dovish members and he's saying that there isn't going to be an impact, and then we've just had the headline today that the ECB told ministers on Tuesday that some EU banks could be vulnerable, that kind of makes there's a loss of credibility there, and it means that the central bank's decision making is either confused or they're ignoring what's kind of going on in front of them, or trying to ignore it and continue with their ultimate goal of bringing down inflation. Yeah, Abens, that is true. The main issue is inflation. But the thing is, you don't want a repeat of the 2008 financial crisis. And that's what a lot of the markets are trying to adjust for. You see, whenever there has been positive news, let's take, for instance, Credit Suisse. Okay, they're going to be borrowing 50 billion euros from the Swiss National Bank, okay, to shore up their own liquidity. That was positive news for the markets. The markets did see a rally, but then that started to fade off and back to the concerns of a potential wider contagion effect that could occur from maybe a potential collapse of Credit Suisse, or other commercial banks that are also opening up and saying that they've actually, that they might have material issues within their banks. And then they're also open up to the shooting range. And then bang, 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 they're also fired down too. And then that kind of, the domino effect happens. And then you have the 2008 financial crisis all over again. So yeah, it's quite a difficult, there's a tightrope that the ECB is kind of walking on at the moment, as are other central banks as well. Of course, we have the Bank of England and the Federal Reserve next week. So that's going to be quite interesting to see how they kind of fare. But let's kind of carry on with the prep. The rate decision is at 9:15 a.m. Eastern Time. Mickey Line, by the way, just to let you know. Deutsche Bank says that we wouldn't rule out a brief halt in the ECB's rate hike cycle if markets have not stabilized by Thursday. I think, we're still seeing a lot of volatility. That could be the case that we do get, maybe, as the worst case scenario for the bulls on the euro, that there is actually a halt. So this is the current C here. So Storneras being more or less one of the three staunch doves of the central bank, and him saying that there might not be an impact from SVB. That makes it harder to kind of see that maybe that actually the central bank might go with a 50 today instead. But you can see here most of the central bank members are on the hawkish side. Bets and expectations. So you had Feb 3rd. Some policymakers believe that 3.5% is the final rate. Remember, they're talking about the deposit rate there, not the marginal lending facility. ECB Insider on March 8th said that slowing to 25 basis points, but hiking for longer could be a compromise. That was according to Econostream, Morgan Stanley on the 9th. said that the ECB is set to hike by 50 basis points at the March meeting and is likely to signal another 50 basis point hike for May. And then March 13th, peak policy rate priced below 3.5%, 3.75% for the first time since February 17th. Money markets priced in a larger probability of a 25 basis point rate hike on Thursday rather than a 50 basis point hike. That's according to ICAP data. 14th, traders priced fewer than 50 basis point hikes through May. Traders raised ECB hiking bets and price 3.5% versus 3.1% earlier. So we've got quite a mixed amount of data the traders are looking at. Barclays say that the ECB is more likely to raise rates by 25 basis points on Thursday rather than by 50 basis points, or not at all. If we're looking at today, just now, or about 6 minutes ago, traders see 35% odds of a 50 basis point hike on Thursday versus 60% earlier today. Only today, they upgrade their expectations for a 50 basis point hike to 60%, and now it's dropped back down to 35 because of that headline that had come out from the ECB. ING, very useful crib sheet, gives you an idea of the scenarios that could be presented by the ECB and what comments could come out and what to look out for. So if we're looking at the dovish side, if they do go with a 25 basis point hike and then start talking about the fallout from the Silicon Valley Bank and also Credit Suisse, if they start mentioning that too, or maybe a further contagion, that's going to lead to, of course, going to be more dovish and lead to the euro further weakening. But you can see more or less the reaction that I'd shown you on the charts, that maybe that they've deliberately done that so as to not cause too much of a shock if they do decide to go with a 25 basis point hike instead and talk about further contagion from SVB or Credit Suisse. But that's, again, ING very useful with their crib sheet. If they were going to continue with their 50 basis point hikes, then more or less, they'll be talking about, maybe the economy. They still need to bring down inflation. You do have the potential for contagion from SVB, but it's not going to have that much of a material effect on the Eurozone economy. So they're not putting the SVB, the contagion from the banking crisis, fully to the side. They can see it and they understand that it's there and it's a potential issue, but they're not seeing as that it is a big issue now. It's not become a huge thing where a lot of commercial banks or the big major commercial banks other than Credit Suisse are having issues or creating a contagion for the smaller banks as well. Mickey line is at 9:15, so we've got about 12 minutes. So this is a previous release as well, of looking at what happened last time round when the rate decision came out. Then now there wasn't too much of a reaction because a lot of it was already priced in with what was expected. So if I so about 10 seconds before the prior release, you see the rate was raised as expected, and then the statement itself wasn't that surprising. As I said, a lot of it was already baked in what the ECB was expected to say because central bank members had already talked about what the central bank wanted, or what their future plan is, or what they wanted to do. So again, there was nothing out of the blue, and the only reason why you'd seen a bit more of a strengthening from the euro is because they're just confirming that they're going to do another 50 basis point hike, but that really didn't last that long, that initial reaction. So there's more of a whipsawing that had occurred from the market reaction. So if I kind of move forward a little bit, kind of see how the market's reacted, keep going. Okay, so you can see on the euro, after the initial move towards the upside, it started going down again. So it continued its downward trend because the news was over and there was nothing surprising. So same thing for the deviations then. I'll quickly bring that up. So the deviations, if you don't know what I'm talking about when I say deviations, When I talk about deviations, I'm just talking about how much the market reacts to certain economic release or a certain figure, or maybe particularly with the central banks, what have they said? What is the sentiment that has been put forward to the markets? So we can see here, as said, that nothing was out of the blue, but they're also going to do another 50 basis point hike, which was more or less as expected. And you can see that the reaction from the markets, yeah, there was a little bit of a reaction, but it wasn't that big. Again, if we don't see a surprise from the central bank, let's say, first of all, with a 25 basis point hike, okay, if they go with a 50, that's going to cause some extra volatility within the markets. But if we do see a 50 basis point hike as expected, that could keep the euro up, depending on what the monetary policy says. If they do let's say a dovish 50 basis point hike, i.e. they hike by 50 basis points, but then say that there is a possibility for further contagion and things are looking worse for the eurozone, that could mean that you don't really get that strong of an initial reaction or movement to the upside for the euro, and you could start to see more of a bearish reaction for the euro instead. The flip side to the argument is that if they don't mention SVB or the contagion at all, and they put it to the side and they continue with their rate hiking cycle, or they continue with a 50 basis point hike, and just mention that they need to bring down inflation, that could bring up the euro instead. But again, that's something that we've kind of got to be very careful of, this market environment where we have seen volatile moves from the news, and then sentiment kind of switches and goes in one direction as it pleases. Yeah, Aben says a person would go with 50, stop hiking makes no sense. Hiking 25 or 50 won't impact banks that much. Bank will fall then, not because of 50 or 25, but the impact for inflation could be significant. Yeah, you could get a scenario where you have stagflation instead, where maybe these banks have had the contagion has spread so much that businesses people aren't able to pay their mortgages because they're not able to withdraw their money from the banks, particularly the businesses, right? If they have a certain amount of money that they can withdraw, or like a backstop, let's say, from their commercial bank, but they have a lot more money in the bank that they have parked away, then that creates a further crisis where everyone's trying to withdraw the money at the same time. The commercial bank doesn't have the money to back it up, or to back themselves up, and then you have 2008 all over again, and that's a bad show. So let's go over this again. A 25 basis point hike, smaller rate hike than expected, that could lead to the euro seeing a decline. But if traders are pricing less of a chance of a 50 basis point hike happening, that means that if the 25 does happen, then you might not see too much of a reaction from the euro moving further down. And then you're looking to the statement to see if they talk about the contagion. A 50 basis point hike could lead to the euro maybe strengthening instead. But then again, it's also down to the statement as well. What's said, that could cause the markets to flip in the other direction and see a positive reaction from the euro instead. Of course, with the bond market, that's going to go quite haywire. Whenever interest rates are raised, if it's higher than expected, okay, then usually you see bond yields see movement towards the upside in anticipation of higher rate hikes or tighter monetary policy. Anything lower than expected will lead to bonds seeing a move towards the downside instead. And then in anticipation, the central bank is going to try and support the economy or do less with their rate hiking cycle, and maybe go towards a pivot instead. So you can see here with the Eurobond futures, when the rate was raised by 50 basis points, you'd seen 10 ticks towards the upside, and after about 10 minutes of trading, okay, so the initial reaction here shows you the initial reaction on the 1 minute candle going to the wick of that candle to capture the time move. And then this represents in the figure in the brackets, the movement 10 minutes after the economic release. Okay, going to the end of the candle. Let's see. Sorry, just listening to James on the squawk, letting me know. He's just kind of repeating what traders were expecting to see with their better expectations. So, again, if we don't get any surprises from the ECB, then you more or less expect a similar reaction, or more or less you wouldn't see too much of a reaction occurring. You see more whipsawing that happens. The currencies, again, you can see here that they're very mixed. You don't see a clear move in one direction you don't see a strong initial move which kind of continues and carries on for the rest of the trading session or for however how long. Right, so let's kind of close that. So there we go. Euro, yeah, still down here. So we've got the Eurobond, Euro JPY, Euro GBP. Actually, let me just bring that up again, because the biggest market reaction that we had seen actually from the markets, if I just bring that up here. So the biggest market reaction currency pair wise we had seen it was from the Euro JPY and also the Euro Aussie dollar. So we're going to keep an eye on the Euro JPY. I want to see how the Euro, actually let me bring up instead of Euro GBP, let me do Euro AUD. Bring that up instead. Okay. All right. So let's see what the ECB bakes in. Again, most economists are looking at a 50 basis point hike. Traders on a different path. So we're going to expect some volatility here. And then the monetary policy statement is what we're going to be looking out for next. Let's see what happens. Let's get the GBP. Okay, hit it away. All right. Hopefully everyone is kind of all clear with what I've talked about. If you found it useful so far, then don't forget to share the video, like the channel, subscribe to the channel as well. Excuse me, like the video and subscribe to the channel. If you are unfamiliar with FinancialJuice, how much time? We've got about 2 minutes left. I can do that in 2 minutes. So FinancialJuice, a live voice and text service where you can get all your information for the economic releases, headlines, the sentiment for the trading day ahead and what's already happened all in one place. So you have your news feed here. You have your voice feed here, live voice as well, and also your live economic releases here on the left hand side. Now all in one place. I'm conscious we've got about a minute left. But again, retail traders don't really have access to a live voice and text. Retail traders don't really have access to live voice and text service. Okay, we've got 1 minute. I'm going to shush my mush and we're going to see what the ECB comes out with today. Let's see if they want to surprise the markets. If they go for a hold, then you'd expect the euro to just go whoosh, down instead. Okay, we're all good. Remember, 35% of traders are looking at odds of a 50 base point hike compared to 60% earlier today. All right, let's see what you do. Ten seconds. Okay, hike, 50 base point hike, 50 base point hike as expected for the interest rate. Deposit rate hike, 50 base point hike, 50 base point hike as expected. So, okay, seeing the euro move towards the upside here. Let's look at what the headlines are saying. Let's have a little look through, shall we? So, elevated levels of uncertainty reinforces importance of a data-dependent approach to ECB's policy rate decision, which will be determined by its assessment of inflation outlook in light of incoming data. So they're going to stick to focusing on what inflation is doing. All right. Again, wanting to return to their 2% inflation target. ECB staff now see inflation averaging 5.3% in 2023, 2.9% in 2024, and 2.1% in 2025. New ECB staff macroeconomic projections were finalized in early March before recent emergence of financial market tensions. Okay, it's a bit of a mention there. Inflation excluding energy and food continues to increase in February, and ECB staff expected to average 4.6% in 2023, which is higher than foreseen in December projections. Let's see what else is coming out. Inflation is too high for too long. Data-dependent approach is needed. So again, just repeating that they're going to stick with a data-dependent approach. So no 25 basis point hike there. So this is how I kind of see it. They popped out the headline of ECB telling ministers on Tuesday that some e-banks could be vulnerable. Okay, so the markets had already more or less acted as you could say they're dovish reaction for them, and then they came back here and said, "Well, hold on, son. Well, hold on, my boys. Let's go with a 50 basis point hike because we've got inflation to take control over. We've got to try and bring it down." So here we go. Let's do some measurements. ECB staff expects growth to pick up further to 1.6%, both in 2024 and 25. To be honest, other than that, see, there isn't anything else mentioned about the fallout or the banking issue that we've seen so far. Okay. ECB policy tool kit is fully equipped to provide liquidity support to the euro area financial system if needed. So, all right. Here we go. Let's see how the markets reacted. So we go. Let's go. So that was about 40 pips towards the upside there on the Euro Aussie dollar. Now, I did say the biggest reaction that came from the markets last time was on the Euro JPY. Okay, 50.4 pips there. Okay. Let's look at the Euro bonds as well. See what you did. Okay. So bond prices heading lower, the yields heading higher. There's 75 ticks there on the initial market reaction, but now more or less, well, it has just gone back to its pre-trading level now, or above it. Same on the Euro JPY. Euro Aussie dollar's got a little bit more work to do. Let's have a look at the Euro USD. Okay, and we'll also look at Euro GBP as well. All right. Oof, that is horrible. That's not as clean as I think. So initially there would have been the move up. Okay, so there was 20 pips, 21 pips towards the upside first. And then we would have seen, from what I can gather, the move towards the downside instead. So about 13.5 pips down instead, following the rate decision. Okay, so again, FinancialJuice. So, okay, let me summarize what happened first. 50 basis point hike was taken. The euro took that in a positive way and moved towards the upside. The expectation of what traders were looking at for 25 wiped away, and instead we got 50. Then the ECB talked about inflation as their main goal to bring it down. That's why they went with a 50. I don't think they mentioned anything about going for another 50 instead. Okay, so November 2023, well, more or less pricing where they expect the rate to be rises to 3.05% from 3.025%. That was before the ECB decision. So now it's at 3.05% is where they expect the more or less the rate to kind of sit. So in a way, they've talked about, when they did talk about the reaction or the data that they collated before the emergence of financial market tensions, could that lead to the expectation that they might go with a 25 next time round, or even, okay, just hold and see what happens to the economy the next time round? They've got quite a while now to see what the fallout is from Credit Suisse and how big the contagion is for the rest of the markets, and also the Eurozone economy too, and then globally. Okay, so Euro Aussie dollar still holding up, or trying to compare to the Euro dollar and Euro JPY. Now, we got a lot of comments. Let's have a look here. Ukamako says, like the video, you lazy bears. Yeah, please. Don't forget, if you found this information useful, genuinely useful, like the video, subscribe to the channel, get the word out there. That basically concludes MacroAce for the week anyways, just to let you know, but all the support is welcome. Yeah, 8 bands with the thumbs. Mickey Line saying, Tony, you're the best. Thanks for doing this. Thank you guys very much for jumping on and joining me live for this session here with the ECB. Don't forget, we got the press conference with Lagarde now. Well, we will do in about 30 minutes or so. So we're not done yet. We've still got a bit of a ways to go. All right. So that is MacroAce. That is FinancialJuice. Again, big boys usually use a live voice and text service to manage their risk within the markets, capitalize on potential trades, and in particular for your day trader, you want to know what's moving the markets so you can make a better or more informed decision, or maybe manage your risk. Again, that's what a live voice and text service can be utilized the best in your day trading. If you want to add it as another tool to your kit, then you can play around with FinancialJuice. Okay, I'm going to put it in the chat here. There is a 7-day free trial of FinancialJuice that you can have a little play with. But first of all, before you do anything else, if you want to pay for the service straight away, make sure you have a FinancialJuice account first with a username or with a login. Verify that account that you have via your email. Then go back to the site and it'll have a little logo saying Go Pro. And then once you've clicked on Go Pro and you've paid for your product or your subscription, then go back to the website, log out, and then log back in if you're already on the website. And that acts as the final verification process for you to then have FinancialJuice Pro. Okay, so again, you have your headlines all live in the newsfeed here in one place. You have your economic release calendar here as well on the left-hand side. You have your live voice as well here in one place. And, so more or less, we do the work for you guys so you can kind of, focus on your trading much, much more. Or maybe the news makes it much harder, much and riskier. But that's what a live voice and text service is there for, to help you manage your trades, capitalize on potential trades that you may see during your trading day. Now, TICKSTRIKE, we're not done yet. So TICKSTRIKE, if you're familiar with TICKSTRIKE, then what you will know is that it provides you with a live, up-to-date. It provides you with, shows you the amount of buying or selling that is going on within a certain asset. Or another way to look at it, it shows you how strong the buying or selling momentum is within an asset, whether that be in Forex, stocks, crypto, your internals and futures. Okay, so when I talk about internals, I'm talking about your VIX. So this little box here is what we call the ticker. Okay, now the ticker represents, of course, your asset here, and you have your plus figure here and your minus symbol. The plus symbol represents the buying momentum and vice versa. Okay, now the number, if you're questioning what that means, so the number here you have, so it goes from 1 all the way to 15. Okay. Level 1 is the most sensitive to market reactions. So if there's a little bit of buying that's going on, as you can see here on, as an example, with the Euro JPY, then TICKSTRIKE will alert you to that. Now, only if you want to see when there's only a big amount of buying or selling momentum that appears within the markets, then you can increase that level, okay, all the way to level 15, or kind of chop and change to whatever level works for you. Level 15 is the least sensitive to market reactions. So only when there's a big amount of buying or selling that's going on will TICKSTRIKE alert you to visually and audibly to what that asset or assets, depending on what you're looking at, is doing. And that, again, there's the 7-day free trial of TICKSTRIKE as well on the website. You know, if you don't want to go for the full version of TICKSTRIKE, there is a more limited version of TICKSTRIKE on the website, completely free, but you can't kind of look at the different assets altogether, as I'm looking at here at the moment, in one place. You can only chop and change between certain assets, and it's also at a fixed level of sensitivity, so you can't really. But again, it's free there, so if you are playing with TICKSTRIKE for the first time, have a little play around, see what kind of works for you. But I have also provided the link for you to get a 7-day free trial as well. So that's TICKSTRIKE there. Okay, MacroAce mailing list. So the deviations for the economic release, right? That again here. That if I bring it for you here again. Okay, that's the mailing list. There we go. You can see that much clearer. So that shows you, again, how the markets react to an economic release. If you do subscribe to the mailing list, you know, then what you would get is the deviations for the upcoming economic releases for the week ahead. Let me just give you a little preview for the FOMC rate decision. As you can see here, this shows you, here I've got the sentiment of what had happened, what was said, and how the markets had reacted to the rate decision. Okay, all in one place. Not only do you get the deviations for the economic releases, but also the upcoming live streams as well, and also the sentiment or what to look out for the week ahead in the Europe, Asia, and US session. You don't get big old charts or graphs or too much detail. That detail is kind of here with me. I kind of go through that with you here. That's where the honey is. So again, MacroAce mailing list, don't forget to subscribe to that as well. I'll put the link in the chat for you here. That's also there for you. And then finally, if you like trading high probability stocks, futures, FX, and crypto breakouts in real time, then you can sign up to Unusual Activity and have a play with that as well too. Okay, that basically concludes MacroAce. Again, thank you for joining me live. And hopefully this helped you with your trading or your understanding of the ECB rate decision and the sentiment surrounding the rate decision at the moment, or the sentiment surrounding the banking crisis at the moment. If it didn't, let me know in the chat, or you have my email as well, tony@financialjuice.com. All feedback is welcome. Okay, anything that we can do to improve MacroAce, make it even better for you guys, then let me know. All right, Ukamako, A Benz says good video, appreciate. Lee Sheehy, probably said that, I'm very wrong. Says thanks, bud. Logan says sentiment tomorrow. All right, yes. Take care and goodbye, guys.